Hello everyone, welcome back to my YouTube channel. I hope you are safe, I hope you are doing well, I hope you are catching RR as usual. As SUCCESSFULL here with a brand new video to help you out to make from Forex market in 2023. So in this video, I'm going to be breaking down some steps so that you can follow in 2023 to be able to go from scratch till getting funded and make money from Forex market. If you are interested in this kind of video, try to subscribe to my YouTube channel and activate the notification bell in case I post any other new videos so that you can follow. So the first thing is I'm going through the what to do and what to not do, just step by step so that you can follow and make from Forex market in 2023 or 2024. It depends whatever year you started trading or you want to start trading. So right now I'm going through the what to do. The what to do is I wrote first 3 months of learning and practicing. Learning and practicing are two different things. I'm going to explain it in a while. So you have to learn and you have to practice what you've learned. These are two things. And now for you to learn, you have to get the course. Okay, you have to get the course and you have to get a mentor. And getting a course and a mentor, you can get it wherever you think you have a course that you can get. Or if you want, also you can go through my YouTube channel. You can get some courses for free. Or if you want the VIP course, you can also join the link in the description of the video. You can just join and get access to all the courses. You have to get access to the course. Once you get access to the course, you have to learn it for several months or weeks. It depends how long it will take you to learn it, but for me it took me at least 2 months to be able to learn SMC. So what you have to do is it will take you time to go through videos, to go through PDF, and once you go through videos and you go through PDF, you'll have to go through the chart and try to make your eyes used to seeing those things. I'll open trading view right now. Let's say that if I'm teaching you market structure on my course, if I teach you market structure saying you that okay, this one is a bullish trend because it's creating higher high and the lower low which is not breaking the previous low. Let's say something like this. If I teach you this, yeah, now you know what is a bullish trend and how it looks like, but what you have to do is you'll have to practice on the chart to be able to identify which one is a bullish trend, which one is a bearish trend, which one has maybe this low, this high, how to identify those highs, those lows, how to identify maybe liquidity zone, how to identify order block or something. So you have to learn, which is going through the videos that I explained this one. And the second thing is you have to practice on the chart to be able to get your eyes see those highs, those lows, those liquidity or whatever you've learned from the course. Everything you've learned from the course, it will take you time to go through the chart and practice it. And if you really, I think this is something I didn't add to do to what to not do, but I added later. You have to take your time to learn. If I say 2 months or 3 months to be able to uh learn and practice, 3 months to learn and practice, I don't mean that you take maybe 1 hour today you learn and you wait maybe 1 week later you take 1 hour and you wait for the 3 months to spend and you say that yeah, I took 3 months to learn SMC or something. This is not how it done. You have to take your time. You have to take your time. What I mean time is you have to give some time in your day so that you can learn those things. Let's say that if you want, for me when I started trading, I think I spent more than 6 hours a day to learn SMC. Like more than 6 hours a day. Not it might not be every day 6 hours, but some days I can spend more than 6 hours just to learn it. What I do, I go through the course. The course can take me 3 hours. Watch the same videos over and over and over to be able to learn everything that is being said in the video. Once I learn everything in the video, I now get the chart. If you have two screens, you can get one of the video on the other screen and one video on the other screen, like the two screen. Okay, so you watch the video and whatever is being said in the video, you apply on the chart. It doesn't have to be live like right now. I think yeah, price is still moving. It doesn't have to be on a trading day. Even if it is on a weekend, you don't need the market to move so that you can practice it. You just look at past data. You look at past data and you try to apply whatever you saw in the video. You apply, and if you get it, try to do it on multiple charts. You don't have to do only on EU. You can try on DXY, you can try on maybe GU, you can try on any other pair to see if whatever is being said in the video works on any type of market. You have to know, and also you have to know if it works on any time frame. Maybe if you saw the video it was on 1 hour time frame, you can maybe try on 15 minutes if you can still see the same thing that is being said in the video. Or you have to try on multiple time frames, you have to try on multiple pairs, you have to try at any time of the day. Okay, the time of the day is really important. Like session, we have Easter session, we have maybe London, we have New York. You have to apply everything you saw in the video in multiple charts, in multiple time frame and multiple trading hours of the day. which is really important. Once you learn in the video, you apply on the chart and you practice. And these are, is still different from demoing or whatever. It's still different. You have to learn from the video and apply on the chart without even entering the trade. Is fine. It's just getting your eyes used to seeing those things on the chart. If you can see now you can go to the next step. You and I said learn and practice. You can maybe take 5 hours a day or whatever. It depend on your routine. It depends on your routine, but you really have to make it. You have to make a routine so that you can follow. And but getting maybe 1 hour a day for learning, it's really not gonna help you. And if you see 6 hours is a lot for you, or 8 hours or whatever hours you are looking for is a lot for you, it's a course. It's a course, okay? Because let's say that before learning trading, or before you started learning trading, you used to maybe go out with friends, or maybe do whatever else, gaming or anything else, movies or something else, and it might take you maybe roughly 5 hours or something. And if you start trading, you'll have to at least take 4 hours from whatever you are doing here. You'll have to avoid some stuff that you are doing daily before, like whatever you are doing before that is making you to not be focused on your work. You'll have to remove some hours from it so that you can get it and be able to trade, or add to your trading plan. It's really important. You have to dedicate some sort of time of your day to your trading, to learn and practice. This is really important. That's for the 3 months of learning and practicing. You learn and you practice, and if you practice, you need a mentor to be able to help you to practice it. Let's say that I learn right now for the bullish trend, that in the bullish trend, let's say that the video says is something like this. I get it on the chart. Maybe I mark some highs, some lows. I said, okay, this one is a bullish trend. I will have to send this chart to my mentor to check if it is really this one is a bullish trend. Really important. Because if your mentor can tell you, yeah, this one is correct, then it makes your learning even faster to learn fast. Oh, I hope that makes sense. It makes your learning to be fast. It might maybe take you less than 2 weeks to be able to get your eyes used to whatever is happening on the chart with the mentor, but it might take you more than 2 months to be able to do. Because if you are alone or without any mentor, you would not know if you are right in this kind of market, which is a bullish or bearish trend. You don't know if your answers are right unless you actually don't know, unless someone tells you. Because if you still a beginner, you don't really know what's happening. And this is exactly, let me show you something on my Discord right now. If I come to my Discord group and I go maybe to traders, beginner traders. So if I come here, let's say this guy is in my mentorship, okay? So if you look well, he's asking me if this setup is correct. And if I tell him it's not correct or is correct, meaning that I will help him to learn even faster than what he can learn if he was alone. If he was alone, he'll have to wait for market to maybe go to stop loss so that I can know if it is a good maybe a good trade, or to go to, or is a bad trade, okay? It has to go to stop loss so that it can be a bad trade, or go to TP so that it can be a good trade. And if it goes to stop loss, you would never know why his trade went to stop loss. But if you have a mentor, then the mentor can tell you why this trade was a loss, or why this trade was a TP. It's really important to have a mentor when you are learning. You can get any course. I don't oblige you to get my course, but you can get any course. Any course you see that is fine for you and you can afford to pay for, just go for it and get the right mentor, and you can actually learn it and practice it. And yeah, and this for the first step. The first step, you do this. Second step, 3 months of demoing. Once you learn demoing, the practicing is still inside of the demoing, and learning also is inside. So everything from here is still be inside of the second step. 3 months of demoing. 3 months of demoing, meaning that you have to be able to trade. Okay, you trade, you get a demo account. Demo account is really simple. You just install empty file. I think by default they have a demo account, but I think it's better if you create yourself a demo account in any broker. If you create it, you have to put the account size, and you can put any account size you think you can use it. Maybe you want to trade with the 100 USD demo account, you can put it. You can put $1,000 or 100,000. You can put any account size. And if you put, now you have to demo. Demo meaning everything you learn from the strategy that you've learned, or the course, you have to apply now on the chart. If now you learn from the course that maybe price will do this and maybe sell down, maybe you can put an alert here. Once price comes here, you follow whatever you learn in the course, and you take the trade on your demo account, and you take it. And once you do your demo and you see that you are getting better and better and better, that's fine. Meaning that you are learning, you're still learning and you practice. And if you see your demo is good, it's really good, like you make some percentages gain, It's really important to know about percentage gain, not money. I will come back about it later. So if you know that your demoing is going well, you can go to the next step. But if you see your demoing you still have an issue, you can still go back for the first step, which was this one. You can still go back to the 3 month learning and practicing. Because if demo doesn't go well, means that you didn't do the first step well. You go back to the first step. But if your demo is going well, then you can now go to the next step, which is really, really important. So the demo, you still need a mentor for the demoing. If I demo, I take a sell share for a demo, but I hit stop loss. I ask my mentor why I hit stop loss. Or if he goes to TP, I can tell my mentor, yeah, I got this trade and he went to TP. He might congrat me, or he might tell me to even do it better next time, maybe based on my entry or my TP or something else. Or I can even ask him, is this setup good? He can tell me why I should take this trade, why I should not take, and I can still demo on my demo account, which is really, really important. Now let's say if you are able to learn, practice well, and demo well, and everything goes fine, you go to the next step, which is 1 month of demo, 2 months of funded trial demo. 1 month of demo and 2 months of funded trial demo, is it comes back to the 3 months of demoing. Meaning that if you have demoing for 3 months, the first month try to demo on just a demo account, a simple demo account. And if you see the first month you've done well, you are able to grow the account maybe by 10% or 20% or whatever percentage you've done. Now you can go for the 2 month of funded trial demo account. Funded trial demo account, I mean, you get a demo account on a prop firm like FTMO. I think they have a trial. You can check their website, link in the description of the video. You check it, you get a demo account. What they do is, if you get a demo account from maybe FTMO, you have to follow the rule. And if you can follow the rule and 2 months you are able to grow the account size despite the rule they gave you, then it will be really easy for you to be able to go for a real funded challenge and be able to pass and even make money. So it's really important. You first month you do this, and if you are able to grow, now the 2 months remaining you go for funded trial. And if you go for challenge trial, if you grow, let's say that if you pass it, you take another. Even if you can pass it in a week, every week you take a new challenge, you pass it, and use a proper risk management. You have to follow your trading plan. It's really, really important. You follow your trading plan to be able to do that. Okay. And if you can the 2 months, let's say that 2 months you do, let's say, 5 challenge, and maybe 4 of them you pass and one of them you lost, that's fine. That's really, really fine. Because if you go for a real challenge, you might even pass it. If you pass, you can still make money. And this is the thing. These are the three first steps. And the remaining is, here is master your trading plan and psychology. Really, really important. Let's say that trading plan, let's say you took a trade, and in your trading plan says that you have to take full TP, you don't take partial. Let's say you don't take partial, you take always full TP. If you always take full TP, and by mistake, instead of taking full TP by following your trading plan, you take partial at 2 hour and 1 hour, or even at 1 hour you close. Or sometimes you take a trade and you feel like, nah, this trade is going to stop loss, you close and it goes to TP. These are some of the things, some of the trading plan and your psychology that you have to master. This video is not about psychology. Okay, I cannot explain everything about psychology for you to follow or trading plan, but you'll have to create one yourself. Maybe in the future I might make a video to be able to maybe follow it. But you have to get the trading plan, and you have to follow your trading plan, and also you have to master your psychology, which is really, really important. Because if you don't master your psychology, you will be all if you don't master your psychology and you don't master maybe your trading plan, it will be really, really difficult for you to be able to maybe go for a real account. Because demo, you might not have the psychology, but still you can make money. But going for the real account will be really, really difficult. And now the next step is go for a small funded account, like an example of 5K from my Forex fund. What I mean, small funded account, is also coming back for the psychology and the trading plan. It's your first time to go for a funded account, and you don't have to go for a big account. You can't directly buy your first account with 100K or 200K, because if you buy 100K, 200K, and you lose it, like, it's really going to hurt you, because it's a lot of money you are spending to buy the account. But if you buy the 5K, I think 5K is about $50, just about $50 you buy it. If you buy 5K, $50, and you pass it or you lose it, it's still fine. It's just $50. $50, if you put in your broker, is still too easy for you to blow compared to if you are buying a 5K account. This is the first reason. The second reason is 5K. If you are trading with 5K, let's say if you are trading with 5K, right, you are risking 0.5, meaning that you are risking 25 USD. If you are risking 25 USD, 25 USD is not too much money to play with your psychology. Let's say if my first time trading and I see minus 1000 USD on my MT5, is really gonna freak me out compared to maybe if I lose 25 USD. If I lose 25 USD on a trade, is fine, it's just 25 USD. But 1000 or 2000 USD I lose on my MT5 is really gonna hurt. That's one of the reasons you go for a small account. You go for a small account to actually make your eyes see those small profit and to be able to grow it, and not really to be able to maybe lose a lot of money, meaning that the money used to buy the challenge. So you go for a small account. It doesn't have to be 5K. You can even go for a 10K. It's fine. You can go for 10K. If you see that 10K is small money for you, like 100 USD, I think it's about 100 USD to buy 10K. If you buy 10K 100 USD, and if you see it's fine for you to go for it, you can go for it. It doesn't have to be a 5K, but you have to get your eyes or get your psychology to be able to treat funded account. And the first funded account, I can't always tell you that you have to pass it. For me, my first one, I even went 11% drawdown, but I was able to pass it. My first funded account was able to pass it. So it depends. If the funded account, the first one, you have to go for a small one so that you can maybe go for a big one later. If you are able to maybe make money from the funded account, you go for a big later. And the next step is value percentage gain, not USD. Meaning, if I come back, this 5K I took here, let's say the 5,000, okay. If you are risking 0.5% of the account size, you know that 0.5% of the account size is going to be 25 USD, right? It's going to be 25 USD. You know that 25 USD is not a lot of money. You might say, yeah, it's not a lot of money. And you can maybe see 100 USD here going to be maybe a lot of money. Or let's say 1000. Let's say 1000 here. Let's say 1000 here, you see is a lot of money, okay. And the same thing if I maybe take a 300,000 USD account. If I take a 300,000 USD account and I take maybe 100 1500 USD, the one, or even let me take I think 2000 USD, okay. Let me take 2000 USD from the 300K. If I take 2000 USD from the 100K, you can see that 2000 USD is a lot of money compared to the 1000 here. You see that is a lot of money, meaning that you see this one is a lot of money, for sure is a lot of money. But according to the account size, which is this one is 5K and this one is a 300,000 USD, the 1000 here is a lot of money compared to the 2000 USD. 2000 USD here I think is less than 1% of the account size, but 1000 USD of the $5,000 account is almost 25% of the account size. It's a lot of money. It's almost, I don't know, almost 20% or 15% of the account size, which is a lot of money. So you have to get your eyes used to percentage gain or percentage risk, and not money risk. You have to get your eyes used to it. If you have 300,000 K account, on the 300,000 K account, if you can't risk maybe 50 USD, because you see 50 USD is already a lot of money for you. You don't do that. Or you risk 1000 USD because it's a lot of money. You have to risk based on percentage. If you think maybe based on your trading plan you have to risk 0.5, meaning that on this account you have to calculate the 0.5% of the 300K is going to be what, and this is the money that you are going to risk it. If you see maybe 0.5 is 1500 USD, I think it is. If you see this one, meaning that on every single trade, by risking 1500 USD, don't see your risk as 1500 USD, but see your risk as 0.5% of your account size, which makes your psychology to be even way easier to be able to manage those kind of big numbers. And the same thing if you have maybe 5000 USD account, instead of maybe seeing you are risking 25 USD, saying that maybe it's small money for you, see this 25 USD as 0.5% of the account size, which is already your good risk. You can't maybe risk 1000 USD because 25 USD is small money. You don't use money, but you use the percentage, and also use percentage growth. If you make maybe 500 USD, let me delete everything here so that I can explain. If you have a $5,000 account and you make 100 USD, by making 100 USD you made 2% of the account size, which is already okay. It's really okay to make 2% of the account size. But if you have 300K account, or let's say 100K to make the calculation to be easier, if you have 100k, if you have 100k, and if you make 2%, you are making 2000 USD. You see now, 2000 USD is a lot of money, but 100 USD is not a lot of money. You may say that, yeah, I want to make 2000, but 100 USD is not a lot of money. Don't complain about the money. Complain about the account size and complain about percentage gain. Percentage gain is really important. If you really want to make 2000 USD easily and not having a big risk, then get a 100k account. You know that this one is just 2% of the account size. It's going to be really easy for you to make 2000 USD on a 100k account than making 2000 USD on a 5k account, because 2000 USD on a 5k account is a lot of money. It's always 40% of the account size, meaning that, or meanwhile, 2000 USD here is just a 100k or 2% of a 100k account. So you should know about percentage gain instead of money, or money gain, or whatever. You value the percentage instead of the money or the USD. If you look at your MT5, if you take a trade, is a stop loss or is a TP, all you have to see is just see the percentage loss or percentage gain. That's the everything that you should know. And then make money. You make money. That's, I just explained right now. When you make money, you don't see the money, but you see the percentage gain. Once you withdraw the money from your broker, that's where maybe you can value your money, because now you are going to spend, you are not going to trade anymore. So that's what you can do. And once you do everything there correctly, you cannot go for a big account size. Big account size, if maybe 50,000 USD is a big account, you can go for it. If you see 100,000 is a big account size for you, you can go for it. If you see 300k or 1 million or whatever that your broker or your prop firm can give you, you see it's already a big account size for you to make enough money for a living, then you can go for it and just apply whatever you've learned that you see is really profitable for you over time. Then you just get the big account size and you go, you pass, and you make money from it. And that's it. You can use this process to follow, and you can make from forex market in any year. Actually, you don't it doesn't have to be in 2023. Even 2024, you can see, you follow the same video, you can still make it. And if I look well, 3 months of learning is 3 months, and 3 months of demoing, meaning that is 6 months. And it might maybe take you about 2 months to pass the 5k or pass any account size. So 6 months, like 10 months is already enough for you to be able to be set to make money. And the remaining months, if you go for a big account size, 2 months is already enough. If you go for 100,000, is already enough for you to make maybe 10,000 USD. And if you make 10,000 USD, it's fine. That's already the beginning. You made 10,000 USD. Take that money to maybe invest somewhere and keep trading, and you make more money again and again. You launch businesses, you do something, and yeah, that's it. You do this process correctly, and you make from forex market. That's easy. I use this one for me, it works, and you can also maybe use it for you, and it works for you. That's fine, you make it. And now I'm going through the what to not do, is also what I've done or what have not done, if I can say. So what to not do, you don't have to skip any of these steps. I gave the steps here. Some people maybe they will say that, okay, I've already learned, and now maybe I'll go through the demo. Meanwhile, maybe they didn't learn well. So you don't skip any of this step. You have to go step by step. Or some people, they might start from a big account instead of going for a small account before going for a big account. This is also something. So you have to follow the step from the beginning till the end. And once you do this, I think it's going to be fine. And the next step is don't rush. Don't rush, meaning that some people, if I tell you learn for maybe 3 months, nah, I can't learn for 3 months. I'll go maybe for 1 month. I can make it. This is not the thing. Take your time. You are not rushing. You are not competing. That's just take your time and learn it. It takes you maybe even 2 years to make it. It's fine. As far as you make it, that's fine. It's not like you are competing with someone. And that's the next step. It's you versus you. The you versus you is that I'm here. I'm a trader. Okay. If I make 5% a month, if I make 5% a month, it's fine. That's for me. If I make 1% a month, it's okay. If I'm down 1% a month, it's okay. It's not that I saw someone else making maybe 50% a month, then I'm also looking to make the 50% a month. Or if I see maybe AstroFX learning in 1 month, and I also want to learn from learn maybe in less than 1 month, that's not how it's done. Okay, it's only you. Like, everything is original to you. You have to get your own way. If you see that, okay, for me, I can learn it for 6 months, take your 6 months and learn it. You don't have to. If you see me maybe writing 3 months here, maybe if I tell you maybe I did it for less than 1 month, you don't have to do your best to beat my score and maybe do it in 1 month or less than 1 month. It doesn't have to do that. It's you versus you, meaning that you take your time and you make it. You don't rush or you don't compete with anyone. You don't compete with your ex or you do anything. It's just you. Take your time, learn, demo, and go for a live account. And even the live account, it's not that maybe my friend has a 300,000 USD account. I want to maybe get a higher account or even same account size with him. It doesn't have to do that way. You can even get a 10,000 USD. It's fine for you. Like, as far as it's okay for you, it's fine. You don't have to compare your whatever you have with someone else. It's just for you. It's just you. Don't just compare it. This is the second thing, and the last thing is don't look for signals. It's really really important. Don't look for signals. You can get setups from maybe your mentor is fine, but signals, this is something that is really really important. Don't take signals. Just remove signal from your brain, because just think of it. If you have maybe 100% of traders, okay, every trader is 100 at 100%. So if you have maybe 90, let's say 99% of the traders lose money and 1% of the traders succeed. If you think 1% of the traders that are succeeding from trading are taking signals, let's say if they are taking signals, if they take signals, who is giving them the signal? Who is giving them the signal? If those 1% who are succeeding are making money or are taking signal, who is giving them the signal? Like the market makers are giving them the signal, or who is giving them the signal? This is first thing you have to understand. So if you know that those 1% are not taking signal, meaning that it's those 99% who are failing, or whatever the percentage those people who are failing, those are the people who are looking for signals from the 1%. So if you see 1% succeeding, meaning that the 99% maybe are focusing more on looking for signals. And if they focus on looking for signals, you, like, 99.99% of signals, as I know, are not profitable. Just know it, like 99% are not profitable. The fact that even if the person or even the 1% that is giving you the signal is profitable, you for some reason you can over leverage. Okay, you can over leverage on one of the signal, or you might miss. Let's say that the person gives you three setup, or three signal. The three signal, let's say two of them he stop loss on, and one when one to TP. Or let's say that the person gave 10 signals, eight of them, or let's say nine of them hit stop loss SL, and one went to TP. And the one that went to TP ran for, let's say, 50R, ran for 50R. You know that 50R and 9R or minus 9R is still going to be 41R, right? 41R profit. But if you miss the one that went to TP, and you took the 9 stop losses, meaning that now, even if the remainder of the members are in profit, you are going to be in drawdown. You are going to be in drawdown because you missed the trade for some reason, maybe because of uh maybe you are not free, you didn't see the signal, or you were busy to do something, or for some reason maybe you are sleeping, time zone, something. Just because of something, you miss one of the signal, and you are now in drawdown. Meanwhile, he with the 1% is making money. You are in drawdown. Right now you are going to say like maybe his signal is not profitable. I took nice stop losses. Meanwhile, one went to TP, but you missed for some reason. But if you trade yourself, even if you miss your own setup, you know that you still gonna get one setup that is going to maybe make you recover from your losses. If I go right now, I think EU, even today, if I check EU right now, 1 minute chart, let me see if I can still have it. Okay, this one is EU, right? If you look at this, I wanted to sell from this area. If you look well, I had the sell here, I took a stop loss. I had a sell here, I took stop loss. I had here, I missed the entry, and I got one buy here, and the buy ran well. Okay, let's say that if I had to give all these those setup or those signals, let's say signal, if I have to give those signals to a members, this one the person is stop loss, this one the person is stop loss, this one is miss. So now the person will be like, his setups are not profitable, I'm not gonna take it anymore. And the next one, huge profit, ran for maybe 50R. And the person didn't take this setup is because maybe the person missed it, or the person just didn't take it because the previous stop loss or the previous trade his stop losses. So the person doesn't take the trade anymore. So like the signal is not profitable, blah blah. And now the person sees this trade went to TP. As this trade went to TP, oh maybe I some reason why, and the person try to come back again, and the person come back for stop losses again. So it's really really important. You don't follow signal, get your own. Like for me, for them, I take this one stop loss, fine. I take this one stop loss, I miss this one, is fine for me. For me, it's fine. I know that I can still get a trade that will go to TP, and that's what happened. I got one trade here and went to TP. This one, no one gave me this signal for a buy. I got it myself, meaning that no matter how many stop losses I got in the past, I can still get a trade that will make me recover from my stop losses. But if you take a signal, it's not sure that you can get a trade that will make you recover from your stop losses, or even the trade that you're gonna be getting, you might even miss it and go to TP. So these are some of the reasons why I'm saying don't focus on signals. And one more reason is when you focus on signals, you don't really make any effort. Some people, they can join a Discord group just for signal, meaning that they don't even go through the course. They just wait, and once the person send the signal, they just take it. They never learn by themselves. And if you don't learn by yourself, you might even, if you don't learn by yourself, even your psychology is not good. If the person takes this trade, price comes here, and now price started giving us a pullback, right? From this pullback, if you don't have the psychology, meaning that you don't know how to trade, once this pullback happens, you are already afraid. You close full of your position. You close maybe at 2 hour, and price end up running for maybe fifth year, and you know that you still have some losses maybe in the past, or some losses waiting for you. And the 2 hour you just got three losses, and you lose all the profit you've just made. Simple. But if you learn by yourself and you trade by yourself, you know that those pullbacks makes sense. Like, they make sense because market has to give you a pullback before a rally to the upside according to market structure. So signals are just the worst thing that you can just follow to be able to maybe get successful in trading. No one gets successful in trading just by following signals. It's really, really important. Learn the something that you can maybe get from your mentor might just be a setup. If I tell you maybe your mentor is maybe trying to buy from this area, you can maybe look at the same zone, and if price comes here, now use your own skill to maybe get your entry, or use your own skill to see if price is really gonna buy here or price will not buy here. But if you're maybe your mentor is trying to buy from this area, you don't always have to buy here. If according to your analysis price will have to keep dropping, you might not even take it. It's because you understand that buying from maybe this area or buying from this area is pointless for you. You might not even take it. But if you don't know how to trade, you just wait for signals. Any of these things happening here, you would never know whatever is happening there. You would never know. And these are some of the things you should not do if you really want to be successful. First, follow all the steps. Don't rush. It's just you versus you. Don't compete with anyone, and don't just follow signals. Learn by yourself, and you can still make it. Learn by yourself meaning you just go through what to do here, and you can make it. And something that I think I didn't add to what to not do is just avoid to really go out with friends and like some bad habit that you used to do before. Use this time to focus yourself on whatever you do here. If in the past you used to maybe go to go drink, do whatever, the time that you used to go and drink, use it to be able to learn and do something. And whatever I've explained here is just not for trading. You can even use it for any other business, whatever you want to do, so you can easily use it. These are just the small step that you can follow. Just follow this step. Do what is supposed to be done. Don't do what is not supposed to be done, and you can make it. 2022, 2023, whatever year you are watching this video, 2022 is pointless, but 2023 or whatever year in the future you are watching this video, just follow it. Or if you even see that some stuff you should do to be able to do it well, you can add it. Just add some stuff, and I think you are all set for the beginning of the 2023, and you can make it. That's pretty much about the video. If you still watch the video till the end, meaning that you like this content, and if you really like it, subscribe to my YouTube channel and drop a like, and also maybe give me a follow on Instagram. My username is SUCCESSFULL. And if you are looking for a course or a mentor for the 2023, you can also get my course, the link in the description of the video. Once you pay and you join the Discord, you get access to all the courses here: full course SMC and scalping mastery, and also synthetic trading. You get any of them that goes with your trading style, and you just follow the step I've just explained in this video, and you can make it in 2023. And that's pretty much it. And thanks for watching this video.